Dear students, welcome to my channel. In this video, I have explained Final Accounts Adjustments, Chapter 13. Don't skip the video, watch fully to understand the full concept of this lesson. First, we'll see Final Accounts is prepared at the end of the year, that is for one accounting period, that it has 12 months. So all the items related to that 12 months period should be brought into the accounts. See, sometimes certain expenses we have been incurred. Incurred means it has been occurred, it happened, but not paid. For example, salary. Okay, we have taken the services of the employees, but we have not paid the salary. Okay, that is like that. Certain incomes have been earned but not received during the accounting period. We have sold the goods for some dealers, and we are entitled to a commission, but we have not yet received. Okay, so certain incomes we have earned but not received. Certain expenses we have been incurred, that it happened, it occurred, but we have not paid that expenses. Okay, so like that. Similarly, there may be expenses which are related to next year. We would have paid earlier, okay, paid in advance. The expenses which are related to next year. Same way, income related to next year we would have received in this year. Okay, so expenses paid in advance, income received in advance. These all related to a next accounting year. So this all will be there. So you have to adjust these items in order to have a correct amount, to show correct amount in the final accounts. Then only we can calculate a correct profit or loss and correct financial position of the business for that particular day. Okay, so and next is certain items like value of stock. It will be ascertained, it will be valued at the end of the year, that is after closing the ledger accounts. Okay, so these are the adjustments we need to consider while preparing the final accounts. But you did in the 12th chapter the simple final accounts. Okay, just to make you understand, the topic is given in an easy way. Usually final accounts will consider all these adjustments to show the correct profit or loss, to find the correct profit or loss of the business concern. Okay, now so to bring these to do these adjustments, and this will generally take place after the preparation of trial balance. So we need to bring this adjustment into the books of accounts by passing the journal entries. So therefore these journal entries are called adjusting entries or adjustment entries. Okay, so now in another simple word I am saying in one more time, final accounts is prepared for the period of 1 year, that is 12 months. So items related to 12 months should be brought into the books of accounts. Items related to next year should be subtracted, and it should not be taken into consideration. We have to show only the items that are transactions related to 12 months period should be shown here. Okay, for example, if you are recording salary, it should be for 12 months. Suppose for 11 months salaries are paid, only 1 month salary is not paid, but that belongs to this year, this accounting period. So what you should do, you should write it as outstanding salary or salary outstanding 1 month, and you have to add with the salary paid, and you have to show the 12 months salary. So same way, rent paid. This rent paid for this year is only we have paid for 9 months, but we have to show for 12 months because final accounts is prepared for the period of 12 months. But here we have paid only 9 months. Actually, we are using the space. Okay, so we need to pay it. Okay, but we have not yet paid. So that you have to show it as a outstanding, and you have to include in the final accounts. Okay, so that is why the amount expenses which are related to this accounting year have not paid, but you have to include by adding them. How we will include? By showing them as a outstanding expenses. I hope you would have understood this concept. That is why we are adding. Some children will confuse what items are to be added and what should be subtracted. Items related to that particular year, for that particular period, should be added. Okay, whether we paid or not, we have to add and show it in the books of accounts. Okay, you should bring into the accounts. So that's why here salary paid, only 11 months salary is paid, but we have to show 12 months. It is because it is being prepared for 12 months period. So you have to show as outstanding salary. And here rent paid, only for 9 months it has been paid. So now we have to show for the remaining months yet to be paid. So we show as a rent outstanding, and you should add. So outstanding expenses should be added. And next example, here accrued income. Accrued income is what? Outstanding. Okay, accrued. You have earned but not received. Okay, accrued. Here one example is, I have taken only book illustrations only, so that when it is asked in the exam, you can write it. That's why I took the same example given in the textbook. Interest received on fixed assets for 10 months. Okay, 10 actually when we have a deposit with the bank, we will receive every month, isn't it? For 1 year period we will receive interest, but here we have received only 10 months interest. Okay, but 2 months interest we have not yet received, but we will receive later. Okay, so but you have to include in the final accounts. How will you do that? Because this 2 months interest belongs to this accounting period, but we have not received, but still we have to write add. You have to add with the interest received, add accrued. Accrued meaning is outstanding. Okay, accrued interest on fixed assets. So now you are adding and showing. So now 12 months interest is 12,000. Now rent paid. This is we have paid rent for 15 months. See, actually final accounts we prepare for the period of 12 months, but here 3 months excess. That means what? 3 months is for the next accounting period. So that we should subtract. We should consider only expenses or income related to that particular accounting year, that is for the period of 12 months. Okay, so you are subtracting. Okay, so rent prepaid or paid in advance will be subtracted. Okay, next one more. Okay, we'll see the adjustments and adjustment entries. Okay, now there are according to the reduced syllabus, you have only 5 adjustments. First one is closing stock and outstanding, prepaid, outstanding expenses, prepaid expenses, accrued income, income received in advance. I will tell you one by one. The unsold goods in the business at the end. What is closing stock? The unsold goods in the business at the end of the accounting period is called closing stock. Okay, so the goods which are not sold, it is still remaining in the business. It is called closing stock. Usually the closing stock is valued at the cost price or market price, whichever is lower. Okay, suppose if it is given in the sum, 2 prices are given, cost price and market price. So you have to consider the lower one. Okay, lower price. Now how you will bring into the books of accounts? By passing a journal entry. Stock in closing stock you can write, or stock in trade, accounting account data to trading account. We have to transfer this stock to trading account, and you have to write the narration, closing stock brought into trading into account, or you can write closing stock is transferred to trading account. Why we are showing this in trading account is, trading account it starts with opening stock, and trading account is prepared. It is the mere difference between selling and buying. Okay, Trade means you have learned the concept. What is trade? Buying and selling of goods and services. That same thing. Okay. Here we are preparing accounts. What is the difference between the selling and buying? So that's why we have to show this in the in the trading account on the credit side. Okay, and then the stock is an asset, so you have to show it on the asset side. See, all the adjustments you have to keep it in your mind. It should be shown in two places. Okay, one is either in trading account or in profit and loss account, and finally you have to show in the balance sheet. So in order to show in the balance sheet, you have to know whether it is an asset or liability. Okay, so here stock is an asset, so you have to show it on the asset side. Now I have taken one book example only, so how you can do it. The value of closing stock shown as adjustment 31st March 2016 is 10,000. So now you know the journal entry, record the date, and you have to write closing stock. You can write or stock in trade account data to trading account, rupees 10,000 closing stock brought into account. In the trading account, you have to show on the credit side by closing stock, and in balance sheet on asset side you have to show. Now the second adjustment is outstanding expenses, that is expenses which have been incurred, that it happened, it occurred, or we have received the benefit but we have not paid for that. Okay, so those expenses are called outstanding expenses. Okay, in other words, certain benefits or services we received but we have not made the payment. So it represents always, it is a representative personal account. Okay, and expense is a nominal account. See, when salary becomes outstanding, it is a outstanding. You have learned in third chapter, isn't it? Representative personal account. Outstanding salary is a represent, but only salary is a nominal account. Okay, and next is we'll see the adjusting entry. Concerned expense, if for example salary, if it is given salary account data to outstanding salary, so whatever expense given in the question, that you should write. Okay, and you have to show this in the either in trading account or in profit and loss account. Sometimes wages may be given as outstanding, so wages where it will appear in trading account. See, the expenses in which account it appears, there you have to go and add, and then you have to bring in the balance sheet. If it is a liability, you have to show it on the liability. If it is an asset, you have to show it on the asset. Okay, so according to the expenses, nature of the expenses, if it is a direct expenses, you have to show on the trading account. If it is indirect expenses, you have to show it on the profit and loss. Being an expense, you have to show on the debit side only, and outstanding expenses is a liability. It will become a liability. Okay, so you have to show on the liability side of the balance sheet. Now one example is there. Rent is payable for rupees 2,000 per month. Okay, 2,000 per month. Now we are preparing for 12 months period. So 12 into 2, 24,000 should be there, but the account is showing only 20,000 rent is paid. So what we should do, I have shown here in the small working notes. Okay, and what you have to do, so you have to find out. So 12 months period 24,000, but we have paid only 20,000. So 4,000 is an outstanding rent. So rent account data to outstanding rent you should write, and rent where it will appear on the profit and loss account. Okay, so there you should show on the debit side. You have to add. Okay, because this outstanding rent belongs to this particular accounting period, so you have to add, and this will be a liability. When you have received the benefit but you have not paid, then that will become a liability. Okay, next is prepaid expenses. See, any expense or portion of expenses paid in the current year, but the benefit of service or which will be received in the next accounting period. So that is sometimes you can call this as the unexpired expenses. Okay, this we will see. It is also a representative personal account, but the expense account is nominal account. Okay. Now see the adjusting entry. Prepaid expense. See, you are paying extra, okay, for the next year also. So that will be an asset. Okay, so we will put in the debit, and concerned expenses will be credit. Okay, and then you have to see where it comes. Okay, in a profit and loss, mostly profit and loss. Mostly insurance will be there, rent will be given. So profit and loss I have written, and it is an asset, so prepaid expenses will be shown on the asset side. One example is given. Insurance premium for 1 year is paid 6,000, that is on 1st January, but our accounting period closes on 31st. Okay, so only for accounting period 3 months only we have, but 9 months we have paid in advance. Okay, the 9 months, our closing date of the accounting period is 31st March. So our accounting period ends 31st March. So January to 31st March is that amount alone you have to consider. Okay, the remaining excess amount for 9 months is belong to the next year. So that you have to subtract and remove it, so that the accounting period for 3 months it will be shown in the final accounts. Okay, so any amount which is related to next accounting year should be subtracted. Okay, it is paid in advance. Okay, so that will be an asset. You have to show only the prepaid amount, not the net this amount. Okay, only the prepaid which belongs to the next year should be shown on the asset side. And next is fourth one, accrued income. This is income or portion of income has been earned during the current accounting period, but till the end of that accounting period we have not received. Okay, so generally it happens in commission, interest, dividend, etc. So now the adjusting entries, accrued income. See, this is also an asset because our income is outstanding. When outstanding expense is a liability, outstanding income is an asset. Okay, so accrued income, that corresponding the concerned income should be credited. And now here I have shown the profit and loss account credit side. Okay, credit side, whatever income that you have to add, and this is an asset, so you have to show on the asset side. Example I'll show. A business has a fixed deposit 1 lakh with the bank 12 months period 1 lakh. So but they have 9% rate they should receive, but they have received only 6,750 rupees only. So we are doing the calculation here. For 1 lakh we have to find out at 9% how much would be the interest. Actually 9,000 rupees we should receive, but we have received only 6,750. So you subtract, find the difference. So this would be the outstanding interest. Okay, so that we have to show. Already received is 6,750 and accrued is 2,250. So totally 9,000. Now you have to show in the balance sheet the 2,250 alone. And now income received in advance. Income or portion of income received in an accounting year which is not earned for that in that accounting period, which is related to the next year. So that is called income received in advance. It is also known as unearned income or unexpired income. Adjusting entry is, this is a liability. Okay, before giving any service we have received money, so we are liable to give the service. Okay, so that is why it is a liability. Okay, so concerned income will be debited, and this is being a liability, you have to credit it. See, show on the profit and loss concerned income. You have to less, keep it in your mind, prepaid or paid in advance, received in advance should be deducted, okay, subtracted, and it is a liability, so on the liability side. Now one example, commission received rupees 7,500, adjustment 1/3 of commission received is for the next accounting period. So we are showing the calculation, 7,500, out of that 1/3 is belong to next year, okay, so 2,500. So here you have to pass the journal entry, commission received account data to commission received in advance, and you have to show on the credit side commission received, and you have to less, and this 2,500 should be shown on the liability side. Now we'll see the exercise sums. Only there are 4 sums. Here they will ask you in 5 marks or even 2 marks, 3 marks, okay, based on the number of entries the marks will be rewarded, okay. Now closing stock was valued at 5,000, outstanding salaries rupees 150, insurance prepaid 450, received in advance. All the 5 adjustments are given. So now see, for closing stock, what is the journal entry? Stock in trade to trading account 5,000, 5,000. Salaries, see outstanding salaries. See here itself you have outstanding salary. What will you write? Salary account data to outstanding salary. And prepaid insurance, okay, prepaid insurance account data to insurance premium account. Commission received in advance, commission received account data to commission received in advance. Accrued interest on investment is given, that is debit. See, you have to see what is debit, what is credit. Outstanding salary is a liability, so you have to credit, okay. When you credit this one, then the expense will be debited. Here prepaid is always an asset, so when asset has a debit balance, so you have to debit. When you debit this, the expense will be credited. See, commission received in advance is a liability, so you are crediting, so that concerned income will be debited. So accrued interest we have earned but not received, that is an asset, so debit. We have to accrued interest on investment account data to interest on investment. Like this you have to do the sum. And now in 12th chapter you would have prepared trading account and then profit and loss balance sheet, so you have an idea, isn't it? So now here adjustments are there. These adjustments already you have learned closing stock, where to put in the trading account on the credit side and the balance sheet asset side. So now only these two you have to. Now see wages, where will it appear? On the trading account debit side. So there you have to go and add the outstanding wages. And here freight inwards, it is paid in advance. It is for the next year also they are paid. So this also will appear in the trading account. So you have to subtract whatever is related to next year, that you should subtract. Whatever is belonging, whatever items belong to the current that existing accounting period, that you should add. I have shown here. See, trading account of Archana for the year ending, debit credit you write, particulars and all the things you write. To opening stock 80,000, to purchases returns you are writing, and freight inwards you have to write in the inner column. And prepaid, see prepaid they have given 5,000, that you should subtract. And then wages received is 24,000 here. And then outstanding, you have to see the adjustments, 12,000 belongs to this year, so you have to add and put. And import duty on purchases and closing stock you have to show this side, and you have to do like this, and you have to find the gross profit. And next is 10th sum, profit and loss account alone they have asked. So here the sum is like that. Adjustment, see the adjustment, salary outstanding they have given, rent paid in advance, commission receivable is you are yet to receive, so it is a accrued commission, okay. Payable means yet to pay, okay, outstanding, we should take it. Okay, so now we'll prepare. As usual, you have to start with the gross profit, and all the income you have to write it on the credit side, all the expenses on the debit side. See, salaries 5,600, it is given in the question, and in the adjustments they have given 400 as a outstanding salary. You add insurance, discount allowed, the remaining expenses you record on the debit side. Here, rent paid in advance, 50 rupees related to next year, so that you should subtract and show, and the remaining expenses you have to show. And here, discount received and commission received, we have adjustment. Accrued, that receivable means we have not yet received. Okay, so accrued commission, so you have to add, and then you have to find the net profit. Now the last sum is, here they have asked you prepare trading and profit and loss account and balance sheet. So now see here, 6 months interest on loan is outstanding. So interest on loan, okay, you have to see loan is there. Here percentage will be given, so you have to find out. 2000 into 10% is 200. We have to pay the loan, but they have paid only half. That is for 1 year, 200 rupees is the rent. Interest, but they have paid only the 6 months rent interest on loan. So the remaining 6 months loan is interest on loan is outstanding. Okay, 2 months rent is due from the tenant. So due from the tenant means what? They have to receive from the tenant. Okay, so outstanding, that is accrued rent. Okay, 2 months rent we have not yet received. So 1 month rent is 25, so 2 into 25, 50. Okay, next is salary for the month of that is 1 month salary is outstanding, and stock, this is closing stock. Now we'll see the sum. See, opening stock, purchases, carriage. Here there is no adjustment, so as usual you are writing everything, and then now you are continuing the profit and loss. Here interest on loan we have outstanding, so already paid interest on loan you have to write. See here, 100, the outstanding is 100, so totally 200. Postage, salary is 1 month salary is outstanding, that you should add and write. And here gross profit, commission received, and rent from tenant. First we have received 250 rupees, and still 50 rupees we have not received, so that you should add and show. And now in the balance sheet, all the adjustments you have to bring it here. Okay, usually whatever items to be shown on the asset side, that you have to show. Cash in hand, furniture, machinery, closing stock, and rent receivable, that is accrued rent, that is here you have to show. And capital you have to take and add net profit, add and show. There is no drawings. Now loan 200 rupees, with the loan you have to add the interest on loan outstanding, so 2100. Salary outstanding, when you add you will get the amount like this. I hope you would have understood all the adjustments. If this video is useful, like, share and subscribe. Thank you for watching.